Here to dive into industry trends with leading ETF experts, this is ETF Spotlight with Neena Mishra.
Hello and welcome to ETF Spotlight. I'm your host, Neena Mishra. In this episode, we focus on Bitcoin and blockchain ETFs. Now, Bitcoin has seen renewed interest of late because it has surged more than 50% this year. In the first part, I'll speak with Michael Sonnenschein, Managing Director at Grayscale Investments, which is the world's largest digital currency asset manager. And they offer several digital currency products, including Grayscale Bitcoin Investment Trust, ticker symbol GBTC. GBTC is not an ETF, and there is no ETF available to investors as of now. In the second part, I'll speak with Eric Irvin, CEO of Reality Shares. They offer a blockchain ETF, the Reality Shares Nasdaq NexGen Economy ETF, ticker symbol BLCN. And in fact, there are 4 blockchain ETFs available to investors. The one by Reality Shares. Then there's one by Amplify, ticker symbol BLOK. There's one by First Trust, the ticker symbol is LEGR, Ledger. And there's one by Innovation Shares, the ticker symbol is Coin, KOIN. We are discussing BLCN because it is the best performing blockchain ETF this year and a really interesting ETF. So we'll talk about blockchain technology and this ETF with Eric. I hope you enjoyed this episode. Joining me now is Michael Sonnenschein, Managing Director at Grayscale Investments. Grayscale Investments is the world's largest digital currency asset manager with about $5.7 billion in assets. They offer several digital currency products, including the Grayscale Bitcoin Investment Trust, GBTC. We're talking about Bitcoin and GBTC today. Michael, welcome and thanks so much for joining us.
Thanks so much for having me. Great to chat with you.
Let's start with the investment case for Bitcoin. It had surged over $12,000 in August. That was its highest level in over a year. And though it is currently trading near $11,000. And some say that it benefits from this environment of ultra low rates. And the Fed just confirmed that rates will stay lower for longer. Now, Bitcoin could also act as an inflation hedge in case inflation picks up due to massive fiscal and monetary stimulus that we have currently. So tell us why investors should look at Bitcoin.
Well, I think for us, certainly as an asset management business, we are encountering investors of all shapes and sizes. We deal with high net worth individuals, family offices, registered investment advisors, hedge funds, endowments, pensions. And then also because Grayscale products trade on the public market as well, we also count retail investors as customers and investors with us as well. And I think that we see a pretty broad spectrum of investors' appetite and interest in allocating to assets like Bitcoin. I think there is a generally accepted awareness of Bitcoin as an early stage technology amongst investors. And so many of them liken investing in Bitcoin to investing in an early stage technology. It's risky. Investors should not be putting more into it than they can afford to lose. But I think as investors really begin to drill in and we help educate them on Bitcoin, they really begin to see a couple of interesting use cases for Bitcoin or other analogs around Bitcoin that do make it investable. One that I think has certainly solidified itself is the idea of looking at Bitcoin as a digital store of value or a digital inflation hedge, where we've gone from a world that was once characterized by physical exchange, certainly to a world that's much characterized often nowadays by digital exchanges. And along those lines, people have begun to think about what constitutes money, what constitutes a store of value, and thinking about Bitcoin as perhaps an improvement on historical stores of value, like gold, for example, and thinking about attributes that Bitcoin has that maybe make it outshine gold, whether it's the divisibility, verifiable scarcity, portability, et cetera. And so there's certainly investors that put it into their portfolios thinking about that investment case for it. I think certainly amidst the COVID-19 pandemic and the primary, fiscal stimulus injection that we've seen both domestically and abroad, it's called into, for a lot of investors, the idea that governments and central banks around the world continue to print money, and whether or not printing can really help dig us out of the holes that we're in financially. And so when they compare that to the verifiable scarcity in terms of the quantity of Bitcoin that will ever be created, it becomes a really attractive investment proposition. And so it's important for investors to kind of think about those two analogs, as well as, I would say, a third one, which often is investors looking at Bitcoin as a value or remittance mechanism, that the world around us is moving 24 hours a day, 7 days a week, and the ability to move value has not kept up with that. And so for many investors, they're excited about Bitcoin, thinking about it as a mechanism to move value around the world, basically instantaneously and almost for free.
Makes a lot of sense. So Bitcoin was launched about 11 years ago. And at that time, some experts predicted that it is going to upend global finance. It could replace the US dollar as the world's reserve currency. But it hasn't yet emerged as a mainstream currency. And in fact, it is still trading well below $20,000 peak that it reached in late 2017. It is very volatile. So many investors believe that it is used mainly by speculators. It is increasingly used in scams. And those are some of the reasons, I think, why Bitcoin has not become mainstream currency. Could you explain why it has not become mainstream currency? And can it become a mainstream currency given that some companies like Facebook and many central banks are planning to launch their own digital currencies?
Nina, I love this question because we talk about this a lot with investors. And I think there's kind of two different parts to what I want to say here. The first is that I don't know that Bitcoin ever wanted to become a mainstream currency. I don't know that it was ever envisioned to displace the US dollar or become a reserve currency. I don't know that people should be saying that Bitcoin has failed or is not mainstream because we cannot buy a latte using Bitcoin, for example, right? These are not reasons to point out that Bitcoin has failed or has not fulfilled its promise. I think we kind of flip that on its head and say, well, wait a second, Bitcoin didn't even exist 10 or 12 years ago. And now we have Bitcoin being traded 24 hours a day in a very liquid way all over the world against every fiat currency, against hundreds and hundreds of digital currencies. We have established, exchanges like CME Group creating futures for Bitcoin, trading alongside assets that have been around millennia. We have the likes of the incumbent financial institutions and financial services companies like Square and JP Morgan and Fidelity and all these different folks meaningfully getting into the space and offering products and services around Bitcoin. So, where we are in the evolution of what Bitcoin could be, we're very, very early on, right? We definitely feel like Bitcoin has solidified its role as a digital store of value, and maybe over time it continues to take share of the investable market that today sits inside gold and other stores of value. But I surmise that we haven't really yet even found that one or couple of killer use cases for Bitcoin, really trying to drill into its divisibility and allowing us to create microtransactions and micro lending and microfinancing and all these other applications that the traditional and incumbent financial system doesn't really allow for. So I think folks need to be patient, and rather than think that Bitcoin has failed or didn't somehow fulfill its promise, actually take stock of actually how much progress has been made in and around Bitcoin and all the infrastructure that is being built around digital currencies today.
Yeah, definitely. There has been a lot of progress. And I do believe in the potential of Bitcoin and cryptocurrencies. And in fact, I own a little bit of Bitcoin, but it's a little less than 1% of my portfolio. That's mainly because I don't know what is the real value of Bitcoin, whether it will go to $50,000 or $500 in 1 year from now or 5 years from now. So tell us if there is any way to value Bitcoin.
This is a question that I'm so glad you brought up, Nina, because investors that we typically deal with are investors that are evaluating stocks and bonds and commodities and are using mostly traditional methods to value assets. Things like doing a discounted cash flow or looking specifically at cash flowing assets and being able to determine valuations and whether or not an asset is undervalued or overvalued. And as out of kind of the number of inquiries we get around this very topic, my team actually very recently published a paper called Valuing Bitcoin. So I definitely encourage people to check it out. It's on the Grayscale website at grayscale.co. And what we wanted to do was create basically a framework for investors to think about how to value Bitcoin. Some of the investment cases I mentioned before are still things that investors can do. They can look at something like Bitcoin, look at something like the gold market, make some kind of a probability of what share of the gold market Bitcoin may take over what period of time and come up with a valuation. They can look at the amount of money that's moved around the world every day through banks, remittance platforms, the Fed wire system, Euroclear, the M2 money supply, et cetera, and see, how much Bitcoin or what Bitcoin's value might need to be in order to satisfy if it took some portion of that amount of money that moves around the world every day. But beyond that, we really wanted investors to know that there is, in fact, a whole other series of tools that they can look at besides using traditional methods to value an asset. And because Bitcoin sits on top of a blockchain, this distributed database that actually looks at and keeps track of every single transaction taking place on the network, there's tons of different signals that investors can look at, which can actually help them value where the asset is. And so in the paper we just published, we look at everything from like dormancy, so how long Bitcoins are sitting on an address and what those trends look like compared to where they are historically. So for example, if you saw a high percentage of Bitcoin sitting on exchanges, you would know that that more likely means that they're sitting in a liquid environment, and you might see a lot more speculators wanting to sell. If you don't see as many on exchanges and you see the time that Bitcoin are sitting on wallet addresses going up over time, then you might think that people are holding and holding for longer periods of time, which would maybe be accretive to the price of Bitcoin. And so you have really this whole series of analytical tools at your disposal as an investor. You as an investor just need to adopt a new mentality and a new set of tools to think about valuation that's different for a digital asset like Bitcoin as compared to maybe a cash flowing equity or a bond or something else like that.
Very interesting. I'll definitely take a look at that paper. Now let's talk about GBTC, Grayscale Bitcoin Investment Trust. And again, this is not an ETF. And in fact, there is no Bitcoin ETF available to investors. So tell us what investors need to know about GBTC. And are there any advantages of getting exposure to Bitcoin via GBTC versus buying Bitcoin directly?
Sure. So the Grayscale Bitcoin Trust is a product that we created in September of 2013. We realized that investors wanted access and exposure to Bitcoin, but there unfortunately were a variety of hurdles for investors to overcome. Where to buy Bitcoin, how to transfer it, how to store it, and how to safekeep it. And we looked at a variety of other investment product models and really took our cues primarily from other commodity-based investment products where investors may want access to a given commodity, but because it's difficult for them to do just those things, source, transfer, hold, safekeep, they often are getting exposure to those assets in the form of an investment trust. And so the Grayscale Bitcoin Trust is, in fact, a very similar model. It's a Delaware grantor trust. The fund itself only holds Bitcoin. It's solely and passively invested in Bitcoin. And today has grown from 2013 to becoming the world's largest Bitcoin investment product. In fact, it now holds over 2% of the outstanding Bitcoin supply inside the product itself. And so for many investors who want access and exposure to Bitcoin, they don't know where to go to find Bitcoin or transfer Bitcoin or how to hold it. And by giving them an investment product, it actually brings it down into a level that they're comfortable with because it feels, looks, and acts like many of the other investments that they make. The fund has a QSIP, it's audited, it produces financial statements. In fact, the Grayscale Bitcoin Trust earlier this year became the first digital currency investment vehicle to become an SEC reporting company. And so it now files 10Ks and 10Qs and 8Ks, and investors really enjoy the same level of disclosure and reporting that they get in many of the other instruments they invest in. And so primarily, the Grayscale Bitcoin Trust has an ongoing private placement where accredited investors only are eligible to buy shares of the fund at its daily net asset value. And this is an unlimited capital raise, so it's an ongoing private placement, and we have new investors coming into the fund every day, causing the AUM of the fund to grow, as well as the Bitcoin under management to grow over time. And so for many investors, this has really allowed them to participate in the asset class, and specifically for the institutional segment, who primarily can't self-custody an asset, whether it is a stock or something like Bitcoin, having the ability to gain exposure to Bitcoin in the form of a security has really opened the door for a lot of them in a way that meets their legal and operational frameworks.
So many investors worry about security and storage of cryptocurrencies because there have been several high-profile security breaches that have resulted in large amounts of cryptocurrencies being stolen. So should investors worry about security or storage in case of GBTC?
I would say that investors are often utilizing Grayscale Bitcoin Trust because they don't want to have to get involved in the due diligence of where do they buy and how do they store and safekeep Bitcoin, right? They're passing that off to us as an asset manager to administer that, and for us as an asset manager to hire, the best of breed service providers to surround the product on things like custody and safekeeping and audit and financial statement production and things of that nature. What's important for investors to realize, though, is that as they see varying headlines that may issue a hack or a theft or something of that nature going on in the digital currency ecosystem, it's important for them to distinguish the fact that those instances that they're seeing are instances of a specific product or service provider or company in the space that has gotten hacked or breached as a result of them having poorer or less than security measures. It does not mean that Bitcoin itself is getting hacked. So an analogy would be the fact that the US dollar has never been hacked, so to speak, the way that Bitcoin has never been hacked. But certainly your corner bank branch has been held up and robbed physically before, much the same way that a product or a company or a service provider working in and around the Bitcoin ecosystem has and can be hacked and is susceptible to that if they don't have the proper precautions in place. And so I think it's very important for investors, whether they're looking at Grayscale or other offerings around the digital currency ecosystem, to really do their homework and really understand, who their counterparty is and make sure they're comfortable with it. Because, we've certainly seen no shortage of incidents around the ecosystem. So who you work with is certainly important.
That makes a lot of sense. Now, one of the problems with GBTC mainly for retail investors is that GBTC usually trades at a premium to its NAV. And that's mainly because it's not an ETF. It doesn't have the creation redemption mechanism that is associated with ETFs. So what would you tell investors regarding that issue? Do you think they should cross-check GBTC's price with its net asset value or the value of Bitcoins on a per share basis, which is available on your website? Give us some thoughts on that.
Sure. So, Nina, what you're referring to is that Grayscale Bitcoin Trust has this ongoing private placement to accredited investors. And after accredited investors hold any shares purchased in the private placement, they're then able to sell those shares into the public market after a statutory 6-month holding period. And so any investor that has access to the US securities market can buy and sell freely tradable shares of GBTC, whether you're accredited or not, without a holding period or any investment minimums, et cetera. And historically and currently, you're right, GBTC has and historically traded at a premium to its net asset value. And what I would say is, first and foremost, that Grayscale does not participate or control or dictate the public market trading of GBTC. There are over 24 market makers in the security every day. It's consistently one of the most liquid securities on the over-the-counter market. But ultimately, the price at which shares trade each and every trading session is really dependent on market forces. And so investors should certainly be looking at GBTC, its relationship to the product's NAV, but ultimately is not something that Grayscale is setting or controlling. And so price movements of the security itself are always going to be dictated by market forces, which often can and do move in sync or in line with the underlying Bitcoin price, or oftentimes decouple with it based on market forces and sentiment.
So do you think the SEC is going to approve a Bitcoin ETF anytime soon? And if that happens, do you think GBTC will be restructured as an ETF?
I think it really depends on your definition of soon. The SEC has done a fantastic job engaging with the digital currency community, really digging into this asset class. And you have to remember that the digital currency asset class is a lot smaller than a lot of the other asset classes our regulators are responsible for overseeing and regulating. And so for an asset class that moves and changes as much as digital currencies do, it's really been encouraging to see the level of engagement, certainly when we're in front of the SEC and other regulatory bodies. And I think this is an important topic, Nina, because a lot of investors, I think, previously may have had themselves on the sidelines of the asset class, realizing that maybe there was not enough regulatory clarity for them to participate. But that's really no longer a valid concern or a get off of or a reason to stay at zero. When you have the SEC issuing guidance and the CFTC, talking about Bitcoin as a commodity, and guidance from the IRS and FinCEN and the Office of the Controller of the Currency, these are things that were not happening a couple of years ago, nor were there congressional hearings going on around the asset class. And so where I think we as an industry have work to do is to create and alleviate some of the challenges that the SEC has flagged. Things like a domestic surveillable market, surveillance sharing agreements, really a market that's more mature. And what we have seen in the meantime is a market that's getting more mature. That's a market where derivatives are developing, lending and borrowing, the futures market. These are all the kinds of tools that investors want and are used to having in and around, the investments that they're making. And so an ETF is going to be a matter of when and not a matter of if. And I think certainly, we as a firm and as a product sponsor are committed to working with regulators when the winds begin to blow in that direction. But how soon is soon? Your guess is as good as mine, Nina.
We certainly look forward to that. So we started with the investment case for Bitcoin. And with that investment case in mind, I wanted to end with the role of Bitcoin in an investment portfolio. And Bitcoin is often referred to as digital gold. And I usually recommend that gold should be a part of any diversified investment portfolio, usually about 5% of the portfolio, mainly because of gold's low correlations with other asset classes. And you did mention that Bitcoin is a risky asset. So I certainly recommend that investors should do their homework, understand their risk tolerance before investing in Bitcoin. But what are your thoughts on Bitcoin's role in an investment portfolio? Should it be 1% of the investment portfolio? Should it be 5%? Tell us about that.
I think it really depends. I think it depends on an investor's risk tolerance and time horizon. We see investments, as small as, 30, 40, 50 basis points, all the way up to sometimes, 400, 500 basis points. And we are primarily dealing with investors that have medium to longer term horizons for the asset class. These are not folks that are going to look for liquidity in Bitcoin if it moves 20% or something of that nature. They believe we're in early days of the asset class and want to be invested for it to see ultimately what direction it heads in. And I think many of these investors think about Bitcoin as a diversifying play within their portfolio. And so Bitcoin's generally uncorrelated nature, I think, has really allowed a lot of investors to look at it to create a diversified return stream and potentially enhance their risk-adjusted returns. And so certainly it's something that investors are thinking about, particularly as we start to see something that we're paying attention to, which is this idea of generational wealth transfer, right? Thinking about the $68 trillion of wealth that's going to move down to boomers and, from baby boomers down to, millennials over the next 25 years, and thinking about how assets are going to be repostured as those assets get transferred. And so from our standpoint, investors are certainly looking at Bitcoin and certainly thinking about it as a speculative investment because, again, it is early days. They do liken it to an early stage technology, but also because of the attributes it has, investors really are not able to find other investments that offer the same risk reward scenarios. And that's one of the reasons investors have been so attracted to it, particularly in an environment like we're in today, where we see massive deleveraging and a lot of difficulty navigating the investment landscape.
Excellent. Really enjoyed this conversation. Michael, thanks again for joining us.
Thanks so much for having me.
Joining me now is Eric Irvin, CEO of Reality Shares and Blockforce Capital. We're talking about blockchain and the Reality Shares Nasdaq NexGen Economy ETF, ticker symbol BLCN, which is the best performing blockchain ETF this year. Eric, welcome back on the show.
Yeah, well, thank you for having me.
So let's start with blockchain. It is the technology that underpins Bitcoin and other cryptocurrencies. And it is a very powerful transformative technology that has many other uses beyond cryptos. But many investors do not understand what this technology is. So to start off, tell us what investors need to know about the blockchain technology and why investors should not ignore this space.
Yeah, that's great. And I think you really hit the nail on the head when you said it's the underlying technology that powers things like Bitcoin and other cryptocurrencies. What I might take you back to the internet and other protocols. The first real killer app of the internet, I would say, is email. That was really when the internet touched our lives across the mass scale, and everyone really learned that, hey, this new protocol for delivering communications across wires and across the ether is kind of neat, and it's going to impact our lives together. So I would call email the first killer app of the internet. Bitcoin was really the first killer app of blockchain technology. Blockchain technology is much, much bigger and can power an awful lot more than just a cryptocurrency. That's just one use case that is a really cool use case, and it was really what started everything. And it has a lot of power, and it will do a lot of things. But blockchain is so much bigger than just the technology powering Bitcoin. It's really the kind of the start of a whole new generation of technology and innovation that will be built on top of it. So with that, I guess the thinking here is like, first we had the internet protocol, then we had the TCP/IP, and that was the ability to transmit information packets over the internet, and then FTP, and then SMTP for email, and then VoIP. So right now our voices are traveling over the internet. That all of these different applications were enabling a different form of communication over an internet protocol. Bitcoin and cryptocurrencies is really money and assets over internet. So I think of it like MOIP, MOIP, which is money over internet protocol. But you can transfer anything really that has a digital use. So for example, a real estate title to a property, you can now store that on a decentralized blockchain-enabled solution that anyone can use and access and trust without having to rely on a central authority. And I guess so with that, and we can maybe go a little bit deeper, but the idea is that you can cut out a good third to half of the overhead and the infrastructure that exists in either today's financial system or in a lot of the technology or in a lot of the back office administration, from supply chains to infrastructure to warehousing and all of these different things, even government and regulatory like driver's licenses and identification, all of those things could really be powered by blockchain related solutions. So it's really, really powerful. But again, pretty early in the technology. I'd say it's just an infant right now, and it's growing to be a toddler, and eventually, it will be pervasive as the internet is to us today.
Very interesting. So let's talk about your ETF now, ticker symbol BLCN again. It is one of the first ETFs to focus on this technology, and it has done really well this year, up about 33%. Tell us a little bit about this ETF and how holdings are selected and weighted in this index.
Yeah, well, because blockchain is such a new technology, and there's not a great deal of publicly traded companies that purely focus on this technology. The trick was how do you invest in a company today that's going to benefit or profit from blockchain technology in the future? Because it could be a 10-year cycle. So what we wanted to do, we're kind of quantitative by nature, and we wanted to build up a rule set and an academic way of identifying which companies were really investing and really going to benefit from blockchain technology, and then vice versa, kind of filter out the ones that were just doing it for the hype and putting out a press release like Kodak, or there was a number of different companies that just wanted to get the upswing from a blockchain in the name and retitling their company. But so we came up with these 7 different factors. We looked at the number of patents that companies had filed in the blockchain arena, then the total number of filings, and this includes everything from their annual filings, quarterly filings, even annual reports, press releases, CEO speeches. So we use a lot of kind of analytical rigor and horsepower with machine learning and in order to scan all of these things and look for positive mentions and more mentions towards blockchain technology. And then we looked at like 6 or 5 other factors and then ranked every company in the universe, every publicly traded company around the globe, based on how much we felt that they were going to benefit from blockchain technology. And even somewhat knocking some of the companies like, say, an IBM, who is all in on blockchain. IBM has really made a huge push towards blockchain technology, but they're such a big company and their revenues come from so many different sources that even if they're wildly successful in this area, it might not actually, boost the stock price. So all of those factors go in, and then we score the companies, re-rank them every 6 months, and then select only those companies with the highest blockchain score in order to make it into the index. And then that's what the fund is based on. We also partnered with Nasdaq, who is a really early innovator in blockchain, using it with their exchange technology, actually. They were one of the first companies to offer a blockchain solution for companies to report their shareholders of record through the Link exchange. And that's why we partnered with Nasdaq, because not only their index capability, but also they were using blockchain in their own businesses. So that's really kind of the makeup of the index and the ETF. And then, again, I think the performance speaks for itself, but it's one part is it's a rules-based system. So there's no human in the middle trying to decide which is the best company or the worst company. And then two, it's really identifying those companies that are the most innovative, and vice versa, deselecting the companies who just have their head in the sand, because there's going to be a lot of companies that get totally disrupted by this new technology. And I think there's a lot of banks and financial companies that haven't even researched it and think it's kind of a joke, and they're going to be just wiped out from this technology. So that's really, I think, where the outperformance comes from. It's ignoring the companies who aren't willing to invest in R&D and really focusing on those companies who are really innovating in the space and building solutions.
That's helpful. And I'm looking at the top holdings, and those holdings explain this outperformance. Overstock is the top holding, and the stock is up over 900% this year. Then I see NVIDIA, which is up over 100% this year, Square, which is up over 150%, DocuSign, which is up over 160% this year. So looking at the two top holdings, this looks like a technology or e-commerce ETF, and that is probably because there are not many pure play blockchain companies that are big enough or liquid enough. But please talk a little bit about some of these top holdings in this ETF and how they are using or enabling the blockchain technology, why these companies earned a high blockchain score that you mentioned.
Yeah. So, and actually, it's funny as you went through some of those names. Obviously, technology is a theme there, but if you think about the world's, the world is becoming a technology company. Even banks, in the future will be just technology companies, and the same thing with so many other, even retail. Look at Amazon. It's a retail.
I agree with you.
But it's a tech stock. So we have that going for us. Then the other is, if you think about most of those names that you mentioned, they disintermediated a kind of traditional function, like DocuSign, really kind of cut out the middleman for a lot of firms and the back office. That's one area where blockchain technology, because it's, again, building like a shared distributed database that anyone can access in an encrypted fashion and a secure fashion, and utilize and store records and others. Square, completely disrupted the payment system. Before Square, the average person, a flower dealer on the street, couldn't get access to a credit card machine because they had to apply for credit. And why would they need to apply for credit to receive money? Well, it was just the way things were done for so many years. So Square kind of stepped in there and came up with a solution. So that's one area where you might just see this theme kind of threaded throughout all of these different companies, where they're breaking down the process and then cutting out a huge swath of the overall kind of expense in the cost structure. Overstock is a little bit different. So Overstock was at the time run by a gentleman named Patrick Byrne, who, and this is a fascinating story, but he railed against Wall Street and felt like there were a number of hedge funds that were what they call naked shorting his stock, but shorting his stock without actually having proof that they borrowed the shares. And whether or not he was right, he could never prove it, and because you're always just hoping that investment firms and hedge fund firms are being honest, but you don't really have proof. So he felt like, wow, this new blockchain could be the solution where only one person can own an identity, and in this case, it'd be like the ownership of a stock per se. And so if you want to lend it out, then you can lend it out, but you can't lend it out twice. And that's kind of the whole reason that Bitcoin works on the blockchain, is because no one can have two of the same Bitcoin. It's kind of like if every dollar bill had a serial number at the bottom, and you owned that dollar bill, we would all know if I tried to say that I owned that dollar bill, because we're all accessing the same database, and it just would, raise a red flag. So he did this with stock market. And so Overstock has created its own stock exchange called T0, where they're trying to disrupt the entire capital market from the New York Stock Exchange to the Nasdaq, to where all companies will be listed on this T0 exchange. And there will be no transfer agent, there will be no DTC, there will be no all of these intermediaries in the middle, custodians even, that would even be necessary, because it would all be housed on the blockchain, all of these publicly traded stocks. And that's one of the areas where Overstock has really shined. But bottom line, I think the reason for so much outperformance this year was due to the COVID and the other part of their business, which is, of course, just disintermediating the brick and mortar retail type stores.
Very interesting. And you said it's a new technology, and yes, of course, it's a relatively new technology, but still it has been around for a little over a decade or so, and everyone agrees that it's a truly, exceptional, brilliant architecture. So why we have not seen greater adoption of blockchain so far?
You're absolutely right, and actually, I think it's going to be even maybe another 5 to 10 years before we really see it. We went through a huge hype cycle of enterprise blockchain. I think it's easy if your listeners can distinguish the two. There's the open decentralized blockchain, which would be things like Bitcoin and Ethereum and things they might have heard about in the news. Maybe that they've even joked about as magic internet money and kind of this kind of decentralized land of different types of currencies. Then there's the permissioned blockchains or enterprise blockchain solutions, where a number of parties, IBM, Microsoft, Walmart, might all come together and say, let's create a shared database where we'll enable people to come on to this database and come off of the database. But it's not just open to the world. Not anyone can access it. And in the case of the Walmart as an example, so all of the suppliers, all of the people in the supply chain, from the melon farmer in Guatemala to the shipping container to the port and so on, can track a good from all of those different people all the way into the store. So if there's any kind of food poisoning issues, they know not to destroy all of the goods, but just to destroy the goods that have that E. coli in them, as an example. And that is a big undertaking, because you have to now convince all of these different enterprises to scrap what they've been doing in the past and to adopt this new thing, which is kind of clunky and it's hard and it's a little bit complicated to understand. I think of it like the old dial-up internet modem, when you had to wait until your modem would connect to AOL. So it was clunky and it wasn't hard, and it was really hard to envision it being, us watching 4K movies in streaming real time on our phones at any given point in time. And that's kind of how blockchain is. So it happens slowly and then suddenly. And I think we're still in that slowly phase where it's just growing in adoption. It's like the sleeping giant that's kind of creeping along. But when you're an investor, as a stock market investor, you have to invest today for what's going to be there 10 years from now. Because if you wait 10 years until it's already here, the value will already have gone up. And so you have to be early. And that's really the whole point of the blockchain index and the blockchain ETF, was to kind of build a list and a package where people could say, okay, these companies are most likely to benefit from this if it is right. And most likely they'll do it early, long before the technology becomes widespread and adopted and just a part of our daily vernacular.
Makes a lot of sense. So your ETF made its debut in January of 2018. And as I mentioned earlier, this was one of the first blockchain ETFs. And at that time, there was a lot of excitement about blockchain because Bitcoin was so hot in late 2017. And your ETF gathered assets at a record pace in the first few weeks after launch. And then the investor interest has kind of waned. So, what is the reason for that? Do you think investors look at blockchain ETFs only when Bitcoin does very well? Or is it because they do not understand that this is a blockchain ETF? Because these blockchain ETFs could not use the word blockchain in their names because SEC did not want that. So tell us about the reasons, in your view, why your ETF and other blockchain ETFs have failed to gather assets.
Yeah, it's. I think you're right. I think that the ETF buyer, and I speak as both a former financial advisor who was an allocator to ETFs for clients, as well as an ETF issuer who's had to build ETFs that are both for clients as well as for advisors, and I kind of feel like it's a bifurcated market. There are people who maybe don't really know what they're getting. They just hear the name and say, oh yeah, that sounds like a really cool category. And they don't do a whole lot of research, and then they just buy it. And I think that was a good chunk of the early adopters, where there was this pent-up demand for an ETF that had cryptocurrencies in it. And then there was a lesser pent-up demand for an ETF that focused on the picks and the shovels and the, kind of the infrastructure, which I view these blockchain ETFs as. And so lesser still, that there was this crossover of people who didn't know what it was. So I think there was a lot of people that wanted blockchain, but they didn't want cryptocurrencies. So they actually wanted these ETFs. And that was pent up from years of not having launched anything, but seeing the market, grow. And then there was the mix of people who thought maybe they were buying into some Bitcoin ETF and then later learned. But then there was also this apathy towards blockchain from the financial advisor community, I think, where they shunned it because they didn't want to explore it, because they just assumed blockchain was Bitcoin, and they saw these ETFs as gimmicks when really they certainly weren't, as we just kind of went through. And now I feel like they're starting to kind of take another look and say, this thing is still around. First of all, cryptocurrencies are still around, and now they're starting to pick up again. So maybe we should, pay attention. But also, wow, these funds have done really quite well, and even better than most of the technology-oriented funds. And yet they're more diversified. They have financials in them. They're global. So I think they're starting to realize that, geez, this is a real thing, and it's not going anywhere. And the assets have grown pretty substantially in the last 2 months or 3 months here, like really substantially. I would say at the lowest point, I think we were around 60 million, and now we're back up to around 120 million in assets just here in 3 to 6 months.
Very interesting. Yeah, I hope investors will take another look, because they obviously like to chase best performing products. And congratulations again on the excellent performance this year. And that's all we have time for today. Eric, thanks again for joining us.
Great. Well, thank you so much. It's been a pleasure.
Thanks for listening. Make sure to like and follow us on your favorite podcast platform. You can find us on all major outlets from iTunes to Spotify. Make sure to subscribe. And if you have any comments or questions, please email podcast@zacks.com.
This material is being provided for informational purposes only, and nothing herein constitutes investment, legal, accounting, or tax advice, or a recommendation to buy, sell, or hold a security. Do not act or rely upon the information and advice given in this podcast without seeking the services of competent and professional legal, tax, or accounting counsel. Publication and distribution of this podcast is not intended to create, and the information contained herein does not constitute an attorney-client relationship. No recommendation or advice is being given as to whether any investment or strategy is suitable for a particular investor. It should not be assumed that any investments in securities, companies, sectors, or markets identified and described were or will be profitable. All information is current as of the date herein and is subject to change without notice. Any views or opinions expressed may not reflect those of Zacks Investment Research as a whole.